Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're just going over the dump in stock markets. Today is basically the options expiry day. I believe it's today, if not tomorrow, but I believe it's today. And so you are seeing quite a lot of volatility and just some droppiness in the market. Of course, we were talking about how all the stock indices did have this lower trend line, not really their macro trend line to the downside, but they did have this kind of lower trend line to the downside that looked like it might end up being a limiter. They were indeed hard rejected. And while I wouldn't necessarily rule out a potential bounce based upon the PCE data that we're still looking for, right? This could be a fake out to the downside, guys, but it does look pretty bearish today. And of course, 2 episodes ago, I did mention that you should probably have taken your profit on that move. And then several days later, here we are, just retracing. Nothing really lost as major support. We had the potential to put in new support on many of these charts. We're looking at the Nasdaq right now, but we just weren't able to do it, right? We just weren't able to do it. There wasn't enough energy yet. Let me go ahead and go to a 6 hour so we can kind of get a reference. Just wanted to zoom out and look at the macro cycle that we've been in. Of course, this is how I'm trying to help you guys visualize what we're going through. And you can kind of see a bottom to the market here. We did have a spike down, so I did leave the absolute bottom a little bit lower. But, we could be thinking about retracing all the way back into these areas, perhaps even lower, before the market has a serious recovery. We are on our way. So, guys, start to get excited because we are starting to get towards that area where you can start to DCA in. If this market does, in fact, end up, curving, right, like this, and it's not just a pure V to the downside, but if we get some sideways action now that we're entering the lower third of this kind of macro cycle pullback, you can see this is about 30 years worth of trading, right? So this isn't a small cycle. This is a super cycle, and we are having the pullback on the super cycle back to support. And if it does start just rounding out, then maybe, any of these levels going forward could potentially be DCA levels where we bottom out at, and nobody's going to know the actual final bottom. Of course, the Federal Reserve might slow their interest rates hikes. They might end up having a holiday on interest rate hikes. And so you could see sideways action, sort of like what you saw here, sort of like what you saw here, even though we had straight down here, and of course straight down here. We've had straight down here, and it can be very terrifying, but there is some possibility that we could have sideways here or sideways here. And so again, like, you don't know which level you're going to actually end up rounding out at. And so again, if you just want to start DCAing in when we find some hard support, not necessarily while we're in free fall, but when we find hard support, it's going to be up to your own risk management to make those type of concepts for yourself. As for my concept, of course, I am targeting these lower areas in particular, and if we have something just crazy happen in the world, then maybe I would even consider a spike below that, because we have seen the Nasdaq be able to spike below its assumed support. And so I wouldn't necessarily want to just assume that this diagonal was the support, but rather maybe, maybe we're talking about something like this, where it's actually this is the support, or I guess I'm actually should be looking here. But anyway, regardless of which one you choose, just the point that it could actually dip lower than we think is the main concept, and that's why I have this third box here, just in case this area and this area right here are kind of pointing us in a direction over here just under the main trend line. Maybe I'll just make that area a little bit bigger, just in case, it takes a little bit longer, and just to front run it just a little bit right on it, but just slightly front running it. And then if we do have one of these crazy wicks to this diagonal, then we would be able to catch that low as well. However, I would just assume that this is the most likely target and that this is almost a guaranteed sure thing, in my opinion. Popping along to the SPY, you can see that we're basically doing the same thing on the on the macro on the SPY, and if we get into the daily, again, like we just have, some of this retracement covering some of these, CME gaps that we have here. Just kind of quickly draw them in. We filled this one. This one is still active. We just filled in this one. So you see, we've filled in some of these CME gaps to the downside on many of these charts, but we do have one that's overhead, which to me suggests the possibility that we could still have that pop up, that we could still break this trend line and get into that kind of CME gap fill area on some of these charts, which would be, either here. Should probably move this down. Kind of stinks to have such a huge box, but again, like if we get really positive news somehow, we could potentially get a run to this macro trend line to the downside. And then I have this smaller trend line because if we don't have good news, well, maybe we can still bounce and fill in these gaps here, even if we don't do anything particularly special, even if we get rejected. And I should probably move this down. I probably drew it on the log chart, but this is linear. And so using the linear chart, you can see that we would top out right there in that area, just enough to fill the gap if we are able to find our way back up. And sometimes markets do this kind of zigzag in order to fill these gaps, right? Same thing over here. Oh, didn't mean to have that green circle there. Just got a bunch of gaps. Probably I have that drawn out already. Yep, just on my lines here. And so you can see we also have one way up here, but I'm not really convinced that we're gonna fill that one in anytime soon. So that might be a stretch goal later on. And sometimes we do leave these gaps open. This one was only halfway filled. Whereas you did see on the S&P that it wasn't filled at all. So that's kind of an interesting difference in the intensity of the moves here, whereas that lower one was filled. We are finding some support on that gap, which is interesting. So we are going to have to monitor the situation. Jerome Powell is speaking today. And so, of course, there can be just volatility in the market just based on that guy whenever he opens his mouth. Of course, we also did get some, gross domestic product reading where we did have a revision basically to the downside, right? So that's not good. Basically losing GDP, and then the expectations for the demand was also lower, and you can see a kind of a significant drop here on the gross domestic income revision, which isn't great, but again, like these things do help inflation, so it's one of these cases where you're picking the least evil. And right now, inflation is harming us the most. So while we still have an overheated economy, they are choosing to fight inflation before inflation just gets carried away for too long. Like we can complain about it for a couple months, and that's kind of annoying. But if it was to carry on for like a year or two, that would be highly disturbing, right? So it is important to catch inflation right now, even if it does, slightly take a hit on the gross domestic product. And I think we're probably going to continue to go this path until we start taking hits in jobs. Right now, there are 2 jobs available for every 1 worker. So if you want 2 jobs, you can still get 2 jobs. And the jobs market is remaining very strong. But we are starting to see some shedding of those jobs. And so soon it'll come back to a 1-to-1 parity. And then, normal unemployment is usually around like a 3 to 4%. That's a very healthy unemployment rate. It's nothing too serious because, sometimes you're just changing jobs or you're just taking a break or something like that, but you're still looking. And so, if we got down to that, a little bit less than 1-to-1 rather than 2-to-1, but less than 1-to-1, that would also be the point. I think if we got too far beyond that, that people would be complaining that the Fed's gone too far. But as long as you can work, your raises aren't covering inflation. So it's important that the Federal Reserve fights inflation, and the consequence of that is that the stock market does go down. This makes people feel poor temporarily, but of course the stock market will eventually rebound. And so if you're able to buy back lower and capture some of those juicier prices, then you can watch those assets grow over time. And so it is a healthy thing for markets to do. And again, just to give it that macro context, when we take a look at the super cycle, it was time. Like we were due for that, right? It's not like it's not like you can just spike up infinitely forever. You have to have cycles. You have to correct. You have to get rid of the bad investments. You have to, we were already busting out of this channel, this macro super cycle channel. We were way overheated due to that COVID money, and we could have just gone to the moon, but of course the retracement would have been even more punishing. And so it is just a normal part of history that we go through this contraction in the markets. Sometimes you guys hear me mentioning Trump or Biden, but this isn't really Trump or Biden. It's not Obama. It's not. It's just everything. It's just how the American economy. It's how the world economy works, and these things do tend to work in cycles, and then we are having our retracement in this super cycle again. But if you can catch it when it's near the lows on the bottom half, the bottom third of the super cycle retracement, then those are going to be the best opportunities of your life. And I'm personally very much looking forward to that. Again, guys, let's just go ahead and zoom in on some of these indices just to see how they're behaving this morning while Jerome Powell is speaking with the European Commission, right? So Jerome Powell is giving speeches and he's basically saying he's not sure if the economy is going to be returning to the pre-pandemic levels or not, meaning he doesn't know just how far markets will fall. But again, I've shown you that we're retracing on a super cycle, and so there's a good chance that we're just going to, keep going down, just because it's a natural process. Of course, there could be that sideways action or temporary pumps. There could be something just amazing that happens in the market, and then we continue our way down. But this cycle isn't over yet, guys. I mean, again, like when we zoom out, we can see that pattern. It's very clear. You can't just go in a straight up, straight line up. You have to touch the ground again, right? And yep, so we have the Nasdaq just doing some retracing, not really losing any type of critical support, but just doing retracing. We are in the lower level where we did have support here. So, it was a nice effort. It was a nice effort to hold this region, but we just popped up, bumped our head, got a hard rejection, and now we're really looking at this area. And if we lose 11,050, then maybe we can be concerned. But potentially this just puts in a double bottom, or maybe down here around 11,300-ish, and then perhaps tries again later on in the week if the PCE data is good. And the PCE data again will be coming out tomorrow, and that should give us an indication whether or not inflation is on track now that the Fed has been so aggressive. And if it does end up that it's on track with the expectations, then the market probably will have a little bit of relief or maybe just a sideways action. There could be the opportunity for a pump if it's positive news. But of course, if the inflation numbers are worse than expected, then you would expect this fall to continue down. And so we don't have any leaks that I've heard about. So pretty much this is just the market just kind of crab walking, just kind of consolidating sideways and reacting to slightly negative news this morning, but nothing, again, nothing too serious. Just positioning itself to try to make another push up or to potentially drop to the bottom of the range. Given what happens tomorrow, or even break the low, right? If it's really bad news tomorrow. So you don't have to be in a trade always, and you know, personally, I'm not going to be in a trade until I hear what that PCE data is, and then I'll know how to make my move. But again, let's see, let's double check the Dow. Same situation with the Dow, just just losing that kind of smaller support just above us, and coming back to the main range where we got that thrust to begin with. So we're just here and just trying to see if we're going to do a bullish retracement or if we're going to, fall down and break potentially 29,500 and what was this? 29,000, just say 700, right? Let's see here. And the Russell filled the gap. So a lot of these indices again are just filling gaps. It's nothing too special. People can get freaked out about this, but filling the gap on the downside isn't the worst thing to happen because now that gap is filled, and if we have positive news, we can move up tomorrow, right? We can move up and we can fill in these higher gaps up here, which would be a good move potentially if the news is positive, and we don't have to worry about it retracing to fill this gap or anything. It's already filled. So we're free to go, assuming that the information is positive tomorrow, which it might be because Jerome Powell did raise interest rates 75 basis points in the last meeting, which was extremely aggressive. It was extremely aggressive and one of the biggest rate increases in a very, very long time. And so it might have had some influence on the market that could potentially give him a chance to just raise maybe 50 basis points or 25 basis points at the next meeting mid next month in July, which could again just increase the odds of a potential rally. Moving along over to Bitcoin, of course, we want to see what's going on. Really, Bitcoin isn't doing anything different than what I suggested it would do. For the last week, we did meet the top of that broadening descending wedge, right pretty much where I expected it to. We did retrace to our kind of support that is tied to our previous node over here. And then we got a nice bounce off of that, kind of basically just replayed this. Very similar to what we did up here in May. Just kind of bounced around, just kind of crab walking sideways, and then retesting the lows, which appears what we're doing. We're not falling to hell or anything, we're just retesting the breakout of this broadening descending wedge, right? We're starting to have that curl, which happened right here as well. And if we do potentially get a bounce based upon the PCE data tomorrow, that's the trade that I want to take. I want to see if we can put in, get a couple of these candles going in the right direction. And if the PCE data comes out, a little bit positive, then I'll probably take that trade for the pump. This is just a little bit of sideways action. You could have played this range just like you could have played this range pretty nicely. But the real thrust of this is going to be whether or not we can even get up to like a 23,000, 500-ish. based upon the PCE data. If it's negative, we could fall over, and so this area over here is basically your last line of defense, right? Like if we break down here, then probably anywhere under, I mean, well, if we break 18,000, then we're probably going down, right? For sure. But you guys can determine, your own point where you would, have a stop loss. Sometimes there's these wicks downs just to fake people out, right? Just to liquidate these guys who think that the market should stop here. Then they get liquidated, and then there's a reversal. So if we do see that kind of liquidation candle, it could actually be a sign that there's going to be a pump coming up. And that's why I would just watch for that, and I wouldn't necessarily get freaked out by it. I would watch for it. I wouldn't necessarily want to be in the market down here. I would want to watch for that potential liquidation candle or the accumulation pattern as we start to kind of round up into as the market absorbs the new data, the PCE data, and then ride it up. Of course, if it continues to break down, well, I won't be in the market in this area, so it could just continue to flop over. There could be some further capitulation in this market. And we do have a lot of bad news. There are, of course, um, you know, uh, different crypto companies which are being forced to sell. I think Cypherpunk Holdings sold off all of its Bitcoin and Ether, and so the market is pretty weak right now. That just happened, I believe, yesterday. So the market is a little bit stretched thin. You're not going to see too much of bullishness before we have some bullish news in the stock market or with the Fed. And then where the market broke down up here, of course, as I mentioned last episode, it was when we got the CPI data. So the PCE data was good, or it was neutral, and then the CPI data was negative, and so we just broke down. So we could have this type of breakdown right here if the PCE data is negative this time, or we could have kind of a pump just like we did if the PCE data is neutral. And then another 15 days later, right, 10 to 15 days later, we could have the CPI data come out, and then it could either pull us down again or it could pump us up. And it really just depends on that data because that's going to predict how the Federal Reserve behaves in this market, whether they're going to increase rates, which would be bad, or whether they decrease rates, which would be good for the markets. It's not good for inflation, but it's good for the markets. Let's go ahead and take a look at Ether. I was suggesting that Ether had to hold 1,000. Where is this one? There we go. And it looks like it did. So Ether narrowly escaped, one of these levels. 1,050 is what I gave it, and we just kind of wicked down to 1,090. So nothing too serious. Still a little wiggle room here. And again, just like Bitcoin, putting in one of these type of formations where you could potentially see some type of a pump depending on the PCE data. I'm not really going to be playing Ether right now, um, but it does control a lot of the altcoins. So as Ether had this pullback, I did warn about it on one of my previous episodes, where most likely your altcoins would be taking a hit as Ether puts in that higher low. Right, so you can go ahead and look at the titles of my last couple of videos, and I mentioned watch out for Ether's higher low. This is its higher low, and it could either break down, in which case that would become a lower low and it would just distort the market. But as long as it can hold above this $1,050, then we have a higher low or a double bottom, which could then perhaps support the rest of the altcoins, which follow Ether, into some type of a rally. So just be aware of that. Otherwise, let's go ahead and look at the VIX. A little bit of volatility rising today, so just bouncing off of my trend line, meaning that of course we may work our way back up to the top of this wedge, and eventually I'm looking for a breakout to the upside to suggest capitulation, or a breakout to the downside to suggest that markets might be relaxing and that we could have some trading opportunities, perhaps a relief rally. So again, like if we do this type of thing, then I'm going to suggest capitulation. If we do this type of thing, then I'm going to suggest that we're going to have a relief rally. And that's just how I interpret the markets. I'm a big time volatility trader, and so I love trading on volatility. Let's go ahead and look at the dollar. The dollar, of course, continues to just skyrocket to the upside. We were hoping that it would lose support over in this area, but it did end up just kind of faking people out. Lots of little fake outs in the market going on as we try to absorb the data about inflation, gross domestic product, as we look at Europe, as we look at Japan, as we look at Russia, as we look at the energy sector, as we look at China and Taiwan. So all of these things like up in the air. And so the dollar is just going haywire, but people continue to flee to the dollar as a safe haven because the dollar, it tends to treat people right. So the dollar just being the beneficiary of all of this. And of course, risk on assets like crypto being, basically defeated by that risk because you can't have risk on top of risk on top of risk. It's just too much risk for a portfolio. So people de-risk, and that's why Bitcoin continues to go down. Let's go ahead and take a look at the CME chart on Bitcoin just to see if there's any kind of critical difference. Nope, nothing too serious here. We are actually, wow, we are very, very close to losing this previous low here on the CME. That's not necessarily um, it's not necessarily something that you should be too concerned about because, of course, you know, let's see what's wrong with my colors here. Because, of course, CME does close occasionally, but it's just not a good look. It's just similar to stocks, like they're going to react to it. So the professional exchanges right now are looking quite different than the 24-hour exchanges. So this is the professional exchanges, kind of like the stock market, right? And then this is the 24-hour exchanges, quite different. This is considerably lower than this point over here. This is a very much lower. But again, on the professional exchanges, you are just barely holding on to this line. And this is starting to look like a distribution triangle almost, where if you lose this, like, and you can very easily fall to the downside. It's just one touch, two touch, three touch, four touch. Can kind of consider this a touch. Um, like we are really pressing on this line, and you could easily see Bitcoin just falling down if we don't have good PCE data tomorrow. So this is going to be pretty critical in my mind, and just one reason why you double check these professional exchanges also. This isn't a good look. Okay, we do want to see the oscillators rounding up, and we do see them rounding down. So that's not a good thing. Uh, yep, our Stokes is pointed down on the 6 hour, so potentially this is facing quite a bit of resistance here. Hopefully it just goes sideways. Let's take a look at the daily. Are we still pointed up or are we pointed down? Oh, technically we're pointed down now, but we'll see how that goes. We are just working our way down in some of this volatility, but we do have the potential to bounce after a little bit of a pullback there. And the MACD actually, yeah, this is having a fake out, but it could curve back up, right? It could do something like this, where it just has kind of, basically like this happened, it pumped up, this happened, it pumped up, came back down, came back down. kind of being weird, kind of being weird, and then maybe one little scare more, and then boom, like just a kind of pump, right? Like we want to just look for, maybe there's a little bit of a fake out, a little bit of a shakeout, a little bit of liquidation of different levels. But then ultimately, we want to see this round up into some bullishness, and it's not looking great for that, but we do have the opportunity, the potential for it. So gonna want to wait for a little bit more confirmation on that one. On the daily, we do have a kind of a buy signal here, but I think with the rest of the stuff pointed down, I'm not really into that trade. I want to see a little bit more confirmation. And of course, this is just an initial indication, so we're going to want to wait for, we want to wait for this to just, perhaps have a second setup. Just this is very tenuous right here. So, guys, I think I'm going to wrap it up there. Just kind of doing a quick video to give an overview of the market. I wish that we had been able to have that larger relief rally, and there is still the possibility of it. But as it stands right now, we are basically accelerating to the downside. And so, yeah, I mean, it's just it's not a good look. We need to have that relief rally as soon as possible, and we're just not getting it yet. We are looking like this market wants to potentially capitulate some more before a bounce. And the previous all-time high, it's nothing. It's just one wick, right? It's like this one, two, right? Really what we're looking for support here. This is just like up and down right here. It's just like up and down. This is like nothing. You can just chop through that stuff. But you really see this support over here at $10,000 on CME, right? You have this kind of this area here. So one, two, three, kind of four, five, basically six, seven, eight, kind of nine, nine, nice touches, in this zone. And so $10,000 does look like to be a reasonable area. And then even this has, like one, two, three, four, five, maybe six, maybe seven, kind of like a zone right up here around, 11,000, let's just say. There's some support up there, and then heavier support at 10,000. So right now, we could easily fall, perhaps to the 16,500-ish just at any time, perhaps get a little bit hung up, fall again, and then really have this zone to think about for potential bounce. But yeah, a lot of what happens next is going to ride on that PCE data tomorrow, um, and then the CPI data in like another 2 weeks, and then of course Jerome Powell's decision on the 15th next month. All right, guys, that was your alpha for the day. Stay safe and happy trading.